Oh, I don't want it on that one. We don't want to look at core dividend history. We'll look at this one. Bum, 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 bum. Top chat, live chat. Waiting for me. Let's do scans. I don't know why it's waiting for me. Morning, Joe. Ooh. Should I get my ring light? Hold on, I gotta turn off these top lights. I don't like the way the lights look on my yellow hair. Your boy needs white hair. I gotta dye it today. I am gonna look at some scans, even though I probably shouldn't because it's Friday. Brokerage. Let's see. Ooh, XOM. I think that's from the other day. Microsoft had another cross up. That goes right along with the theme. Joe, by the way, you weren't the only one to ask. Should I be trimming Google? SPG. There were a couple subscribers, listeners, that said, hey, I should be trimming this stuff, shouldn't I? I don't know. I mean, it's a hard one. Like I said, I'll address it personally. The quote that I'll say this again, Joe, but I'll say this since it's just you and I. Josh Brown said it was great. They started out with, I think it was Carrie, I forget her last name, or it was one of the value investors. And she said, I just don't, I feel like maybe we're in a too volatile situation, and I don't want to get into these tech stocks because they're trading so high. You take a company like Whirlpool, and it's solid earnings, solid dividend, and a good solid stock for us to invest in the long term. And Josh Brown came on fired up, and he said, we started out the show looking at Whirlpool. The real money is in AI stocks. Whirlpool, what are we in the 1950s and thinking that washing machines and dryers are going to lead the revolution? I thought that was brilliant. It's how I'm starting the show today, and the focus of the show. The reality of this is, you're in an AI market. I mean, there's no doubt about it. Foot Locker released earnings. Foot Locker. In fact, let me look up that symbol. FL. They released earnings. They are down 26%. When was the last time you were in a Foot Locker? I mean, it just kind of goes right with what he's saying. So, UDOW crossed up. Up, down. Up, down. UDOW. UDOW. Let's see. Let's lever. Let's look at low cost. But it's looking good. Did I put Moderna in here? Yeah, for Paul. Okay, I've got it in there. By the way, anybody with Apple, you got paid your dividend yesterday. And I'll bring it up. If you're reinvesting your dividends, you bought at 173. It's at 175 right now. So, and I think, okay, she's just drinking water. Dogs are out here. Spider sectors. I never know if they need to go out or XLB. Morning, Brian. Yeah, hit the like button, subscribe. I feel like such an influencer. I was talking to somebody yesterday saying that I really need to monetize at some point, but I just feel this shit should be just, it's not. I do want to take a look at the ARCs. ARC F had a cross up, which could mean PayPal. I mean, PayPal is a big portion of that. Penn National Gaming, has it been beaten down enough? I don't think so. Even though it's gambling. DraftKings has just been on a roll. Neither one in my mind is a good bet. Okay, let's go to ARC Holdings. The ARC funds, if I haven't mentioned it, your boy is wow, Spotify had a cross up. This one has just been I just don't like the valuation. But you take a look at NVIDIA. I don't like the I've missed that one. Honest to God. Vuzi, which is the Amazon. I think this is the Amazon of no, maybe it's not. It's a disruptor, I know that. God. No, none of the ARC holdings interest me. Dow 30. Any of the Dow 30s. Triple M. I don't like 3M. Even though 3M, and you know, you guys on the live portion get this, even though 3M is where it traded, God, you have to go back to 2013 for it to be traded like this. Joe, I think PayPal around 60. I think you're right. It definitely seemed to bounce. So I think adding at 60, 61, if you get the 59 handle, I think it's just a gift. But I do think at some point this year it's an $80, $90 stock. But look at 3M. God, what's their PE and forward PE 10? 6% dividend right now. Whew. God, that lawsuit killed them. Well, shame on them. I'm not even going to bring it up. Intel crossed up. Honeywell crossed up. Good amount of the Dow 30 crossed up. And I am going to do a look at... I have to go in here. The scans are going pretty quickly. I'll add IWM. Let's add that one. I think you can. I'll have to see if you can see it. I mean, just it's super, super clear. The NASDAQ either has to come down or the Dow Jones has to go up. I mean, even this 5-year chart, and I wish I were a premium subscriber to get to the 10-year chart, but you can see the divergence. And even if we go here and I look at QQQ and we look at the weekly of QQQ, since the October lows, you've gotten only half of it back. So if we are in a bull market, if we are in a bull market, I'll finish this thought, then you're looking at 400 on the Qs. I'll look at OS. I do have to bring up PayPal. Did I bring it up? Let me see. Yeah, I did bring it up. If it gets to 50s, I still like it. The 3M it's the lawsuits with the earplugs with the military. It's some of the mask stuff. It's some of the lawsuits with they're basically bogged down in lawsuits, and it's affecting their long-term viability. It's just a matter of, by the way, just to spoil the podcast, the ChatGPT portfolio is up 1.4% versus SPY at 1.1. Now, I think the NASDAQ is close to 1.4 or 1.5, so it might not beating the NASDAQ. But if this chart is true and it's heavily NASDAQ weighted, I mean, just look at that year to date. 30 freaking percent on an index. On an index. That's just out of control. WBD may have been beaten down. Comcast has a cross up. I thought Comcast at 30s was just a freaking gift. You do have gaps down there, so it'll come back down. Wall Street just doesn't like cable companies. Marriott has a cross up. Intel. I should put all these in, but Airbnb finally has a cross up. I like that one. ABNB, because I mean, honestly, if you're going on vacation, who's not even looking at Airbnb? I mean, if you're not looking, you're a dork, douche. I had yogurt this morning, so it will be tons of mouth noises for you ASMR fans. And Steven, if you're listening from Tokyo, you and Joe had the same question about should you trim Google, should you trim Microsoft? I mean, at 52-week highs, it's just tough. I mean, I hate to say yes, and the reason I hate to say yes is because, again, you've only gotten half of the holy crap. There's just too many cross-ups. MA. We'll do MA as well. MasterCard. I want to check out AXP. Let's go to strategy tester. I like AXP at 150. Boom. Okay, let's see if there's anything on the homepage of FinViz that tickles my fancy. Let me go to stock websites, pre-market movers. Anything on here? Oh, Palantir. Look at Palantir. Farfetch came out. Crazy good earnings. Not crazy good, but shocking. 20% up. Mullen, of course, is on there. Super volatile, but nothing that I care to. If you're not following me on Twitter yet, and if you didn't see this yesterday, douchebag Kramer, let's go. Let's go back and see if he tweeted anything this morning, which he always has. Yeah, exactly. This right here, I mean, Kramer's right. It's not avoid the bubble. I mean, that's what Josh Brown was saying yesterday. It's not avoid the bubble. Okay. Does anything scream douche? Look at that. He's going to Total Wine. I mean, does this guy not have enough money? He's charging people $700 a year for a club that, gives you bad advice. He's now got shitty fucking, tequila. And he's at Total Wine because his wife owns the company. Yeah, his wife needed something to do. I mean, let's be honest. They don't need the money. He just started this as a pet project to keep his wife busy. But what a douche. I mean, if I ever take a picture like that and you see me like that, punch me in the fucking nuts. Just throat punch me. Do whatever you need to do. Wake my ass up. Do I sound angry? Kramer is right. I mean, that's 100%. It's not about, and I've made this mistake with NVIDIA. Personally, I made the mistake with NVIDIA. The valuation of NVIDIA, I've said, is not worth it. It has greatly, here we'll go to Seeking Alpha, and let's do NVIDIA, and I'm going to chart this. Charting, and we'll add comparison. We'll add AMD. We'll add Intel. We'll add your ON Semiconductor. Anybody else in the chip space? Qualcomm. I don't need the S&P 500. If you guys think of any other chips, let me know. Write it down. But yeah, look. I mean, I have honestly missed the boat. I own AMD. I missed the boat. Look at year to date. NVIDIA, 121%. AMD, 68%. I missed the boat on NVIDIA. And the reason I missed the boat on NVIDIA, morning Larry, is because I was focused on this. You can't focus on that. And it's got to be a part of your decision. But if you look at this chart of NVIDIA and you see back here in December, this was clear. Back here at about 170, it was clear. Morning, Sherry. Absolutely 100% clear. Hit the buy button. It had all the validation in the world, and it was taking off. Right around here in February, when AI really started taking off, hit the buy button at 223. Because you know what? You're at 316 now. You're bumping up against 52-week highs. 52-week high, 108 to 301. You're 5% above your 52-week high. Is it time to trim? This is one of those where I don't think so. I just, the valuation is high. Do we get taken down? The average target price is 290. So it's well above where it should be. Do you enter into this? No. Do you start to trim? I don't know. It still has validation. So I'm tempted to say no. As long as you have validation up there on a long-term trend, and the 50 days moving up, the 9 days moving up, the 21 days moving up, the 200-day, I'm tempted to say no. Your earnings come out May 24th. Do you think these guys are going to say, yeah, we have an inventory problem. We think that China is going to invade Taiwan Semiconductor. We can't make as many chips as we want because Apple has taken up all of the foundries. So do you think they're going to say that? Hell no. They're going to say, look at all of the advancement we made. And they're going to tout that AI runs better on NVIDIA chips. 100%. So, Kramer's right on that one. I ain't going to say that on the podcast, but maybe I will. Who knows? Okay, let me see if anything stands out. I did my scans. These are top gainers. New highs. Trending support. I mean, this front page of FinViz, if you guys aren't waking up and looking at this front page, I don't care what other stuff you look at. I mean, major news right here, you can see they've got it. You've got your heat map. You don't have to subscribe to this. This is all free. And you've got your top gainers, new highs, unusual volume. I mean, come on. There's no reason that you should be paying for a trigger stuff like Kramer has. Just go to fucking FinViz. I mean, look at the insider trading. Ooh, energy transfer. Bought $12 million worth? Hold on. Let's go down here. Warren Kelly with a big buy of an energy name. Okay, let's put this in. Before I go over this, big insider buy. And it's on David Tepper's top list, I believe. Let's see. I think it's on his top list. There's EQT, energy transfer. Okay. Boom, boom, boom. Brian, I think you're right. By the way, good morning, Sherry. Good morning, Larry. Good morning, Jeff. Good morning, Brandon. I think you're right about 3D printing, Brian, but I liken it to .com. And the reason I liken it to .com right now is, so if you remember back in like the late 90s, and I think you and I are about the same age, but the late 90s, you had this rush of .com. Everybody was trying to get on the internet. I think 3D printing was like that 4 or 5 years ago. In fact, Kathy Woods did a bunch. In fact, I think one of her, she had a 3D printing ETF that I don't know if it's still there or not. But I think it was like that before, and like the late 90s. And then 2000s, you just crashed. I mean, all those .coms crashed. They went from worth something to worth nothing. And then they started to come back slowly. The winners started to be chosen. In my mind, I don't think you want to, and it's different than AI. I think AI right now, I think we are in a bubble, but you can easily pick some of the winners. I think with 3D printing, I don't know that you can pick the winners because there's not, quote unquote, big players. If Apple decides to do a 3D printer, you easily beat the entire market. So in fact, all those small players, look at when Apple entered, and I said it yesterday, there's a great Wall Street Journal video about Apple entering the headset, the virtual reality market. I think they just kill it. Now, they're not a printer company. I mean, HP, I think, could probably do something in the 3D space. And Joe, you're right, 3D metal printing. I mean, 3D printing will change manufacturing because, for instance, and Tesla is starting to do something like 3D printing with their stamping process. If you watch the the Cybertruck or any of the Model Ys that are being used, they have these enormous stamping machines. And in fact, the stamping process pretty much puts the two pieces of the vehicle together into one piece now. And the wiring harnesses, things of that sort, it's all fairly factory made. But a lot of those cars have parts that are 3D printed. They're no longer machined. And I think that looking at things that way, talking about Whirlpool, I mean, will washing machines be 3D printed? I've seen houses that are 3D printed. They have machines that build a house and the exterior of a house, and it includes plumbing and things of that sort. And it's all done on site. So I think you're right. I just tend to think the winners haven't been chosen, and you're different than AI. I think you can choose winners that will still be around because they're kind of sorted out. Yeah. I here's what I think, Brian. I think you could bet lunch money, as Sherry always says, on getting in before the boom. But I'd rather miss the first 15 to 20% and be sure of the last 30%, 40% move. Hopefully that makes sense, but I just don't think it's like, Excite was supposed to dominate the internet. Yahoo was supposed to dominate the internet. Did you bet on those? They were kind of like, Yahoo's still around. In fact, this article's still on Yahoo. I think Verizon owns Yahoo now. They still make a good amount of money. It's not like it's poor, but I like this one. Okay, I found that one on the front. Okay. And I've got enough scans, so I'm going to start this fucker now. There's Wednesday, Friday. I feel like singing that song. But I think you're right, Brian. I think that's the right thought process in my mind. And remember, anything anybody tells you on about the stock market, it's all opinions, because the market is a living, breathing, entity, and it'll do whatever the hell it wants to do, no matter who puts in what opinion. BSY. Let me look at BSY before I start this for you, Veron. And I got to look at On Semiconductor for Brian, too. Bentley. Is this the one that does Bentley cars? I saw them on CNBC the other day, I think. No, it's software. Let me see. Infrastructure Engineering Solutions in Americas. The company offers open modeling and open simulation. I don't know anything about the company. The PE is super high, relative 0.43 dividend. So you really got to rely on growth. It's up 26% year to date, 48% over 1 year. It's at its 52-week high. The target price is 51. Unless you know something like crazy good about this, you got in at 42. And it's at 46, so you've made 10%. It's got validation. So Varun, I would probably stick with this. Just realize you're bumping up against 52-week and target prices there. So don't let a good 10% go to waste and come back down to 42, because here, we'll take a look at, I'm going to pull this back here to where before it started really kind of, it was floundering right there. So these shaded lines over to the right, those are what's called volume shelves. And I can move this line in TrendSpider to see volume shelves. And what this tells us is who's holding the stock currently and at what price. You can see since March 17th, people have been trading this. They're currently holding a lot of it at 42 like you. You don't want to be one of those people where it's at 47, 48, and all of a sudden everybody pulls the rug who's at 42 and says, we're up against 52-week highs. We're up against the target price. You don't want to be one of those people. As this 45, and this is why I would suggest getting TrendSpider, as that $45 becomes more of a volume level support, you can be assured that that would be your stop loss should you see a pullback. Right now, I think 45, if it were me, I'd put 45 as my stop loss. So if it hits 45 at any point in time, I would absolutely 100% take that profit and just get out, because buying back in, most likely it'll come back down here to 43, 42. But I don't know anything about the actual company, but I would be playing it like that. Great pick on this one. Great, earnings. If you got in right before earnings, I think that's a great opportunity right there. I just, without knowing the actual thing, you can see May 11th, Goldman downgraded them to a $47 price target, and that's where you're trading today. So I'd be a little bit careful. Yeah. Brian, blame it on me all you want, man. I'll just go ahead and blame it on Kramer. Yeah, overseas stock is hard because I'm not a big, I'm a tech guy. That's where I've made my bread and butter. A director. They've been selling up here. Here's what you have to know about this GV group. And by the way, my name is Gary Vaughn. GV group. That's not me. I am not a 10% owner of Google. I wish I were. But you can see they bought $2 million worth. And it looks like they're just taking some profits. If they're a 10% owner of Google, then they own billions of dollars worth. So this might be the equivalent. Say you have $100,000 in your account. This might be the equivalent of selling a couple $1,000s worth. So I would think that it's not, this $18 million, this guy is a director. That's enough to make me a little bit worried, but you can see back here on May 5th, he sold $8 million worth. So I think this guy's just, here he is selling at $8 million worth. I think he's just taking the time to, maybe he's buying a house. It's a lot of money, but if he's a director there, that boy got a lot of money. So he's just probably with the run up, rebalancing, because when insiders own a lot, and remember, there's a closed window. So when you're an insider, I was an insider at Earthlink. I couldn't trade Earthlink stock. I want to say, 9 months out of the year, I was locked out. So when you have the ability to say it, yeah, exactly. His wife divorced him. Oh, I like Macy's. Man, you guys are keeping me from starting this thing, but I like Macy's. Oh, come on. 15.19. The algorithm had you in at 15.19. If you got in at 14 W, you're, God, great trade. Palantir is going nuts. I have that in my list. I think I have it in my list. I noticed that, Sherry, this morning. Palantir is just going crazy. And I don't know why. Let me see if there's news. They had to have released something about a contract or something. Analyst report. Oh, ARK Funds. ARK Funds bought them. So it's funny because, I got invited to that Kathy Woods fireside chat. And it's a small group, maybe 50, 100 people are going to be kind of zooming in with Kathy. And I got one of the questions. And so one of my questions to her is, hey, you publish all of your stuff. I understand there's logic around it, and I commend her. I mean, I do think she's up there with investors like Buffett, Tepper, all of those guys. I think she is one of the great ones because she has been spot on Tesla. And this was when she was a small fund. And she made her way, but she has been spot on with the price of Tesla. And I think she continues to be spot on with Tesla. I'll talk about Tesla on the podcast. But if you publish your sales and buys every day, this is what happens when you get back into Palantir. Again, they're not making money. They're losing $255 million, but they have tons of cash on hand. So, something like $4 billion worth of cash on hand. So they're fully funded. I mean, there's no danger of these guys going out. If you drink beer, I would agree with you, Brian. I think. I mean, they're getting canceled from both sides, which is ironic because, the Republicans always hate canceling. But meanwhile, they're trying to cancel Disney. They're trying to cancel Anheuser-Busch. They're trying to cancel a lot of things. So I don't know how you can be against it. And kudos to Disney, man. And I'll go over this freaking brilliant move by Bob Iger. The timing of it, because DeSantis is right. Cutting costs. Hey, let's not put money into Florida. Because we do have to cut costs. I think that's true. But 100%, Iger, why would you put money into a state that doesn't want you there? That's leadership, I should say. Doesn't want you there. They are the number one employer in Florida. They were adding 10 to 15, maybe even 20,000 jobs with this campus, spending $17 billion over the next year or so. And you've got a governor who is fighting them? I mean, come on, dude. He's out of his freaking mind. This lost him in the election. So, yeah, I like it. I'm a fan of, Iger. I'm not a fan of the way he left, the way he kind of screwed Chapek, specifically in coming back. I think there's too big of an ego there, but I do think he's playing chess and DeSantis is playing checkers, because I think money talks better than politics. And when you can say, here's what you have to know, and I talked to a couple of Disney employees yesterday about this, and they're actually employees. There was such hate for this move when Chapek announced it, moving people from California who have their lives and their families in California. I think it was 2,000 people. They hated Chapek for making them move. So you have employees who hated this. You also have an employee base who hates DeSantis. You have an employee base who wanted Chapek to do what he did with politics. So Chapek was in a no-win situation. Iger then comes in. He tries to play nice with DeSantis. DeSantis wants to, hardball Disney and say, you're part of the California elite and I'm going to stand up to you, Iger, blah, blah, blah. And he doubles down. And so Iger on a conference call, on the earnings call says, hey, we don't want to do business. It makes no sense to do business. And then he backs out $17 billion. So Iger not only gets to stick the middle finger, like you say, Brandon, to Florida, and to them. But he gets to the benefit of giving the middle finger to DeSantis from the employees. He gets the benefit from employees saying, hey, you don't have to move. We're not going to do this. He gets the benefit of cutting the costs. And Lord knows, here's the thing. If DeSantis doubles down on this, then and does something even bigger and more extreme to Disney, what kind of message does that send to people that he's going to for money and donations? Because if you are that anti-Disney, say some of these donors, their kids watch Disney Plus, their kids love Disney, they go to Disney, and they don't want to see Disney go away. Are you giving money to DeSantis? Hell no. So it's a no-win battle for the guy, and the guy is now known as the anti-Disney candidate. And if you want to know, again, branding matters. Ron DeSanctimonious, like Trump branded him the first time, swing and a miss. Nobody cared. Nothing. Trump calling him Meatball Ron, that is a grand slam. Absolute grand slam. And I think you're right, Sherry. I think Palantir at this point, let's take a look at a little bit more long term. I think you're back up here at 22. Honest to God, I think you're back up here in the 2021 era when you're at 22. When they start actually making money, I think it's no problem. It gets back to 22. I mean, I chose probably the wrong horse in the race. I chose Snowflake over Palantir, and I haven't done real well. Back down here at 184, it probably makes sense at a $400 stock. So, yeah, I like it. I like it there. Okay, I'm going to record the podcast now because I've gone off on my tangent. Let's see. We're going to delete that. Bum, bum, bum. Good morning. It's Friday, May 19th. It's almost 9:30 because I was going off on YouTube Live. If you want to watch the YouTube Live, it's out there. I post a video of just the podcast, but the live stays up. Today I'm on my laptop, so it's not screwed up. It didn't freeze a bunch of times. It's there for you to watch. We were going over some of the stocks that are really flying, like Palantir and things like that. But I wanted to start out with looking at SPY. Yesterday, and we'll take a look at this candle a little closer to, I'll move it in closer so you can see that actual, so the morning candle, the open was 414. It got to 418. The low was 414. So you're in this 0.3 range, okay? The afternoon, it opened at 416. The high is 419.67. The low was 415. It got rejected at that 420. Now, the open right now, 420.66. If you hold 420 today, and most likely you will, it doesn't automatically mean that we've got to buy. Because if we go back here to a weekly and we look at this, that rejection right there is 420. Look at what happened back here in August. So in August, you went to the highs. You went all the way up to 431, and it got rejected. Then 420 was the resistance. Just because you get over this doesn't mean that automatically we're off to the races. But what you have to realize is that the January highs back here in 2021 of 472, I don't know that you're necessarily getting back there, but 450 is absolutely in the range if you get to over 420 and hold it. I think next week is key for this one. I think you should keep your eye on it. And then we go to the Qs. And we look at this, the Qs here. You're still in this absolute bull market here. 320 on April 28th was the buy. You've got all the confirmation in the world. Do not give up on this rally. Do not try and sell this rally. I think it's got confirmation. Do I think that it continues? Well, let's take a look at a longer term chart of the Qs. And if we take a look at this and we see this, I'm going to drag this down. These highs back here at about 400. You're at 337. You've really only gotten back half of what your highs are. So in my mind, I think if we continue like this, if the debt ceiling does have an absolute, a deal by this week or next week or whatever, if there's even inkling, I think you get back at least to this little tip right here, which is 370. That means TQQQ, you could probably buy it and hold on to it. Here's my guidance for this one is, if you're in TQQQ, don't get rid of it. Don't trim it. I know I said, early in the week you should trim it. I just think this rally is too strong to trim right now. And at 31, it's going to open up at 32.12. I think you may have a good amount still in the run. If you get nervous, I would probably put your stop losses. If you're in at 27, I would probably put your stop losses right at 30. If it gets to 30 here, then you're at least taking off 10% or things like that. Put your stop loss in. If you're getting nervous and you don't want to hold over the weekend because something might happen, take a little bit off. Just take some profit. That way, if you do open up on Monday and we come down to the 30 range, there's no way you're opening Monday down at the $27 range. I just don't see it. So I do think that you could trim on this one just because it's triple levered ETF. But from the long-term perspective, I like the Qs to keep going. And here was an interesting thing that I saw yesterday. I was watching CNBC at lunchtime, and they opened up the show with, I think, Jenny or one of the other girls who's a value investor and mostly value. And she was talking about, I think we're in an AI bubble and I'm just not willing to buy into this stuff. So I think that, I'm more interested in companies like Whirlpool. And Whirlpool has had a downturn. Let's see, Whirlpool here. It's been in a downward trending stock for this year. I mean, the entire year. You started out at 155, you're at 133. If we take a look at a long-term, a weekly of Whirlpool, you're back to just after where the pandemic kind of started. And so Jenny was like, yeah, I think it's a good one. I think it's got some upside opportunity. Don't fight the trend in my world. I think, this one again, 128 here, it's not a bad thing. But I just don't, and Josh Brown said it perfectly. He said, we started out this show talking about Whirlpool. When people are making real life-changing money in AI stocks, it might be a bubble. But do we think that we're back in the 1950s with washing machines leading the revolution? No. Whirlpool, and he's right. And even Kramer said it, and I said I wouldn't say it on the podcast, but I'll say Kramer was right. Let's go to Kramer's Twitter. I'm going to look at it because he says it correctly. And I get really angry at Kramer because he's so wishy-washy and he's always wrong about this stuff. But he says this right. He says the answer to anything is that it's a bubble. And he's right. There's people saying it's a bubble and it's too expensive. The key point is how much money can you make in the bubble before the bubble bursts? And that's the key point. And I've been wrong 100% about just focusing on this PE. And it's because, I've never traded in a bear market, and last year scared the F out of me. So I'm now trading in a market where I'm looking at PE. I'm trying to but it doesn't, at this point, the PE and AI stocks doesn't matter. And it's just about how much money can you make in a bubble before that bubble bursts. Here's what you have to know. NVIDIA way back, if we go back and we look at this chart, in the 2015 area, I think. Let's see. I think it was back here, maybe 18 and 19. It was probably here in 17 where it was trading $24 equivalent. It was at a 50 PE. And people were saying it's overextended. It's crazy. The growth that they had greatly outweighed that 50 PE, and they just grew into it, and people started giving them more valuation. It just kept going. And that's where we are today. It's just it's going. And so here, I did a little comparison. Year to date, if you take the chip stocks, I took NVIDIA, AMD, Intel, onsemi, and Qualcomm. And the only reason onsemi's in there because Brian wanted me to look at onsemi. But look at the year to date, 121% for NVIDIA. I picked AMD, 68%. I'm not crying over making 68% because I chose AMD. I'm upset because I picked the wrong one. And I do think NVIDIA's earnings are coming up. Let's see what the date is. They're coming up May 24th. So next week. If you think that these guys are going to say, hey, we've got too much inventory. Hey, we're not going to be able to manufacture enough because Apple took up Taiwan Semiconductor's, foundry, and we can't make enough chips. If you think they're going to say anything of that other than, hey, we're the chip that runs AI the best, and then all of a sudden you get this crazy run, I think that's what you're going to see. You're going to start to see hype. And so is it too late to get into NVIDIA? Personally, I'm not getting in at 320. It's kind of like getting into Netflix. And we talked about Netflix being a crazy runner, and I thought it was coming back down to 300. Well, yesterday they announced their ad tier has 5 million subscribers. Look at that. I mean, just in the morning, it was up 7%. And you're down a little bit. You're pulling back. It's at 369. The algorithm had you in at 322. May 8th. I said, you know what? I don't believe in it. I think it's going to decelerate. You have this ascending triangle. I mean, and it's broken out above it. I would not buy it. I would wait for this to get back to 350. They are the only streamer that is 100% making money. So let's talk about ChatGPT. If you didn't know, yesterday was a moment in time that should be remembered. ChatGPT released an iOS app. It is soon coming to Android. If you guys know anything about development of apps, you know Apple is 100 times easier to develop for than Android. Android, you have 9 million different versions that you have to develop for, and bugs pop up in every single one, and you've got to beat them down. It's like a hungry hippo. You got to beat those things down. With iOS, you've got one version, and it's nice. It goes across all platforms, all versions of the iPhone. It's just one. Well, ChatGPT released that app. Here's what you have to worry about with ChatGPT. If you think that ChatGPT is now going to take over search, you should be afraid of investing in Google. If you think ChatGPT is going to be the super app, and I'll explain this, you've got to be a little bit worried about Apple. So ChatGPT, if you didn't know, it's kind of text-based. It doesn't do images and stuff like that now, but it's like having a conversation. It will house all of your information. So it's very close to this. And don't be surprised if week after week we get updates to ChatGPT having additional functionality. But imagine having a travel agent in your pocket. So for instance, it houses all of your calendar information on the iPhone. It has access to that. It has access to all of your credit cards on your iPhone. And you can go into ChatGPT and you can say, find me a vacation in Switzerland. And it goes out, finds you an Airbnb, finds you a flight, finds you a train pass, finds you a car, finds you the cheapest options, and presents them to you. And then it's one click. You say book it. And it goes in and books it on all of those different apps. That's what you have. That's just a travel-related one. Imagine going into ChatGPT on your iPhone and being able to say, schedule a meeting with this person, this person, this person, this person, this person. ChatGPT goes out and grabs their calendars because you're on some type of thing, with Microsoft or something, and boom, you've got it. It is going to change the game. And that app is the first part of the game. So I would be slightly concerned that they're taking some share away from your favorite tech plays, but I wouldn't be too afraid. Google, I think, is going to do the same thing with Bard. And so we'll talk about later, do we trim Google, Microsoft? They're at 52-week highs. These are crazy valuations, crazy good. Do you trim them? I'll talk about that a little later. In my mind, I'm not afraid of Google losing because I just don't think that people will start to use ChatGPT in the numbers right now. I think it will get to that case, but I think Google is far enough ahead to actually knock those down. And speaking of things that people don't use, like Whirlpool, Foot Locker released earnings. When's the last time any of you were in a Foot Locker? So it's down 30%, 26% on open. I wouldn't put money into it. They made 70 cents. They were expected to make $1.25. I just point that out because, again, invest in what you use. And if you don't go to Foot Locker, don't invest in Foot Locker. Let's talk about insider buys. Energy Transfer. This one had a $12 million buy. And basically what I did was I just went to the home screen of FinViz. If you're not using FinViz, use FinViz. And you can see the number 2, Warren Kelsey, bought $12 million worth. This one, MGTX, I don't even know who he is. James DeFranco bought Dish, 12%, $12 million of Dish. We could look into that. But this one, Energy Transfer, Warren Kelsey, bought $12 million worth. I went down, I looked at it. The average target price is 17. It's trading at 12. Its 52-week range is between $9.15 and $13.67. So you're butting up against a 52-week high, but your average target price is significantly higher. December, Citigroup initiated coverage with the $16 price target. I looked at this. It is number 6 on David Tepper's TOC 2023 portfolio. It's his number 6 pick. I trust a billionaire like that when he's picking it. So I do think that this one is interesting when we take a look at it on the algorithm. The algorithm has a buy here at 12.55. So at 12.72, it's not crazy to think that it can continue up to the $17 mark where the actual price target is. Now, the 15, you are only 6% off your 52-week high of 1367. Energy's been in a slump, and Energy Transfer hasn't slumped with the rest of it to the extent of the rest of the energy sector. I mean, you're between $12 and $13. If you can get this in the $12 range, I think at some point over the next 6 months, you get to sell it at 13. That's my guess. I saw it there. Let's talk about some of the winners. Uber's close to 40. Remember, I put a $40 price target on it. It's at $39.17. If you're close with Uber and you got in at the $32 mark, I might start to trim when it hits 40. I wouldn't trim before it hits 40. I think their IPO price was around 40, 41. You're going to see this one go up incredibly on the next earnings if they announce positive cash flow. That's it. We talked about Snowflake at the 120 mark, and I said, at the 140 mark, I thought it was a great price. I added a little bit to it at 140, but I currently have a significantly higher price. Average buy-in, I think it's around 190 or so. It's at 181. This has been going really well. And you know what else is going well? Palantir. Palantir, ARC, Kathy Woods bought Palantir yesterday, shot up. This one's up 5% in pre-market to 1238. I think a couple of people on YouTube got in the 11s. Kudos to you guys. If you bought in here right before the earnings at $7.82, you've almost doubled your money. High five, get there. If we look at a long term, I do think with Kathy Woods buying into this one and with the market conditions that we have, along with their most recent earnings, I think you're looking at this one going back to 22. So I think it's a good buy. I think, I chose Snowflake. I'll probably, make my way back to Palantir. It's just burned me before. So I'm a little reluctant to do it. We talked about NVIDIA at 320. Hopefully I did on the podcast. But NVIDIA, when Kramer says, yeah, you should own it, don't kind of trade it, I kind of agree with them. I think now that you're over 300, I think you can get this at some point in time below 300. I just don't know if you're waiting. I mean, the earnings are coming up May 24th, and I expect a total pump on that one. Qualcomm. Oh, I got somebody coming down. You're going to hear a bunch of barking, but Qualcomm. Hold on one second. Hey! Come here. No. There's your joy. Qualcomm. Jim Leventhal bought it yesterday. It's trading at 106. When I looked at this and I included Qualcomm, it's down 0.22 year to date. It's just not been a good performing stock. I think it, I just wanted to say, hey, I think it could come back. I just don't know. I meant to include that in the losers, but I put it in the winners. Roblox, we're at 40. Dump it. Trim your stock. You're at 40. You went up to 41 here yesterday. Trim it, because I think you're going to get down at 35 again. So Roblox has been a winner. Google, we'll talk about it. Do you trim it? Blah, blah, blah. But it's been just an absolute fire. Cleveland Cliffs. If we are going into a recession, Cleveland Cliffs, it's materials. It's put in a floor at 15. I think it's put in a floor at 15. I'm going to start adding to it again. But remember, here's the thing. Pre-pandemic, and you have to go back to pre-pandemic levels. This was a $8 stock. So the danger is that we're going back to the $8. The issue is I think they've been able to successfully raise prices, increase output, and cut costs at the same time. So I think it's a good play. I will probably be adding to it, but I am looking at that long term. If it does get down to about $10, I will probably trim and just get out. PayPal, we talked about PayPal. I think it's putting in a good floor. The MACD hasn't crossed up. So it hasn't crossed up. But I do think it's put in a good floor here at 60. I think at some point you'll be able to sell this later in the year at 70 and 80. Disney, they announced yesterday they're not building a $70 billion campus. They are not bringing 20,000 jobs to Florida based on some political drama with the governor. The governor is now known as the anti-Disney candidate. I'm not sure that's going to work for him. Good luck to him. But I think he chose the wrong hill to fight on. Just my personal opinion. I think he will probably retaliate significantly against them. We'll see what happens. But I can't imagine that being a good one. Now, here's the thing. Do you want to buy Disney? Disney announced, the other thing they announced yesterday is they are starting the process of making ESPN a direct-to-consumer app. If you didn't know, I worked in the cable industry for many, many years in the early 2000s. Before I started at Earthlink, I know a lot about these contracts. If you subscribe to cable, you are paying anywhere between $7 and $11 for ESPN, whether you watch it or not. It is on every basic tier right now. So you're paying, when you pay the cable company, $7 to $11 is going just to ESPN. That's not including ESPN. Hey. So you are paying that for ESPN. If they can do it to consumers and they can pay, hold on one second. Hey! Now, come here. Daisy, do not set her off. This is me being a parent. And I know you guys love it. But so if they can get to do direct to consumer for $9.99, for $14.99, for $19.99, just imagine sporting events. They will carry a significant weight. And so ESPN, they can bundle that with Hulu, with Disney Plus. They will have a super app just like Netflix has. So I think that's an important milestone for them. I still don't think you buy it here. I have my price at $100. I think I made a mistake. I think it's just broiled in too much controversy. I think we're going back down to the 80s. I think you can wait for that. PXD, it is almost near $200. Let's see. It is up. PXD is up 1.32% today. It's at 206. It's about where I bought it at. So I believe in this one. While I wait for it to get to 220 and energy to come back, I get paid a nice 11% dividend. I'm pretty happy with that. I'm not worried about it. UNH. Hold on one second. Hey! Hold on. Hey! Hey! Get over here. Get! Come here. Come here. Get! No. No. Go. Go. You're good. bed. You're welcome. I'm not editing that out either. That's staying in. Sit down. No. They're staring at me now. UNH, United Healthcare. I bought it 485. It's at 481. I think it's coming back. I think it's still good. So I like that one. It's been beaten down. Again, we're going over losers here. Pan W. It's under 200. Palo Alto Networks. It is cybersecurity. It's going above 200 at some point again. It's at 190. My average purchase price, I think, is 183. I just continue to add it under 200. I haven't sold it because I want to build up a base and I want it long term. So I've just been continuing to do that. Sedge, Solar Edge, SEDG. I've said this before 9 or 10 times. When it gets under 300, you buy it. When it's over 300, you sell it. I don't care what the actual percentage is. Under 300, you buy it. Over 300, you sell it. You've been able to do that 9 or 10 times for pretty good gains there. So Sedge is one. Baba, they released earnings, and they were not as robust as you want. It's trading 84. I would wait for confirmation on this one. It was $1.56. You can see they made $2.79. I would wait for this. They announced some AI stuff. It is questionable whether the Chinese government will allow some AI stuff. So I don't know, but I do think that this one pops back up towards the $100 range at some point in time. If you wanted to buy it today, I do think it pops up to the $100 range. Take a look at this weekly chart because I want to show you this. This is lower. If you think Baba is not a better company than it was back in 2018, you're out of your mind. It's 100% better company. It is 100% better stock. It is way down here to where it was in 2016. I don't think that you just look at this company like, oh my God, it's getting back to its $300 days. But I do think at $100, you kind of trade it. Just take a look. This line right here, I'll draw a line at $100. Is a good trade because if you just go under right there, look at that. You had one opportunity. It got down there. You wait. You had another opportunity. Boom. You had another opportunity. 3 opportunities since 2022, since the middle of 2022. And you made pretty good gains on that. So I do think that 100 is there a good one. Let's talk about Tesla. I didn't say this, but I drove back from New Jersey to Atlanta. And I have a Tesla, and I used autopilot. It was game-changing, absolutely game-changing. It was so good on this drive. Now, it's still got some issues local. I do not think by the end of the year you have self-driving Teslas out there like you have Cruises in Arizona and San Francisco and other places. I don't think you have driverless cars in Teslas. I think they are far away from that. I think you do have people who are driving like me on the highways. It changed lanes. Hold on 1 second. Hey! Hold on. Get over here. No. Come here. Hey. No. Get inside. In. I am closing this door. No. Get. Go. Sorry. Okay. That's enough. But it is game changing. Kathy Woods has continued to buy in. Tesla is 100% right. I didn't get in at the 160s. It's up at 180s now. Yeah, I mean, it's trading at 179. So I probably missed it. I am going to buy it because it will be at 250 before it goes back to 140. That's my thinking. Boyle has taken a good move of late. If you haven't looked, natural gas is on the rise. The algorithm has you buying in here at $3.02. You're at $3.79. So 20%? Great move. And I think Zephyr got into that one. Great move by Zephyr on that one. He timed it right. 302, great price. If we go and we look at Boyle's up 0.53% today. Natural gas is up 2.85. I would not get into this one right now. I think KOLD still has, you can see that 200-day is just super strong. If you see the 50-day cross up on the 200-day and we have a golden cross, it's off to the races. Absolutely off to the races. New 52-week highs yesterday, CRM. CRM is Salesforce, 52-week high. Microsoft, 52-week high. Uber, 52-week high. Booking Holdings, 52-week high. And Chipotle. Let's talk about this now because Joe asked, hey, Google, should I trim it? It's high. Steven from Instagram, live from Tokyo, wrote me this morning. You briefly mentioned a few days ago taking some profits and what should be trimming. There are ongoing high stocks with Microsoft and Apple coming back around. Would you advise some looking at these particular long-term investments? Should I trim? Here's my take on it. I got my dividend yesterday from Apple. Apple paid out their dividend yesterday. So it's 5 figures. It is, a good amount for me. I do get, not the Warren Buffett billions of dollars that he gets from the Apple dividend, but I do get 5 figures. I'm sorry, 4 figures, not 5, 4 figures from my, it's mid 4 figures. I don't know exactly how much, but it's mid 4 figures. And it's a super small dividend, but I reinvest my dividends. So with Apple in particular being close to 52-week highs, in fact, let's look. Let's look at Apple. The range is between 124 and 176.15. So you are at 0.13 and it's trading at 175.69. So am I trimming? In fact, I bought yesterday. I bought probably at the open today. I don't know. I reinvested my dividends. Am I upset at buying at that high? Kind of. But would I ever remember to buy them? No. So I reinvest the dividends in all of these tech stops. And typically after earnings, they are at 52-week highs. The suggestion that I gave to people is, and it's a super personal assumption, but if you're at 52-week highs, you should have identified the buy before. If it's a long-term buy, I think if it's in a brokerage account, you look at your tax situation. Remember, if it's a short-term play, this is going to be, and you're in a 40% tax bracket or a 32% tax bracket. If you sell short for those gains, 32% or 42% is going out in taxes. So you're taking that money and you're giving it away in taxes. Long-term, if you've held it for more than a year, you're only paying 15% or 20% if you're one of the high earners. But most people will pay 15%. So your tax situation matters. So understand where you are in your tax situation and what you'll pay if you do trim. Because I don't think with Apple, Microsoft, and the AI bubble that we're in, I don't think in particular those, even with Google, I don't think those are at their highs. I think they continue to move until we're out of this bubble. Am I concerned if you go back down, say Apple, for some reason, crashes down to 120, and all of a sudden you're in the negative? Am I worried about Apple coming back to 170? No. Like I said, I think you can sell at this high if it makes sense. In a tax advantage plan, like an IRA or a Roth, where there is no tax event, I think you take some off. I haven't necessarily taken any off personally, but I think I'm going to build up some reserves in cash in those accounts. I typically am 90 to 95% invested in those accounts. In fact, I think I still am. I should be taking, the 4 or 5% that I actually gain. And again, if you pull it out in cash and you wait for a pullback, you've got, if you're in a Fidelity, you can put it into one of those bond funds and get 4 or 5%. So one of those bond funds where you actually have access to the cash, not a bond fund that you buy and have to sell. So I think it's very personal. I bought at the high because I'm reinvesting my dividends. So it's not that big of a deal. Paul from Facebook wanted me to look at Moderna. The question is, do you stay with the sinking ship? Moderna got you in at 128. It got you right out on the next candle. This is the algorithm. And again, if you're trading stuff like this and you have emotions and you're like, well, I think I should get in, that's where the algorithm really comes in. That's why I built this thing, is to take emotion out of the trade. And when you get emotions out of your trade, if you asked me today, would it be in Moderna? Absolutely not. Moderna is a trade stock. It's a hype stock. It's 100% just something that you trade. I don't think that you buy and own this. Right now, it's a one-trick pony. It is COVID. Governments are not buying the COVID vaccine like they were. Moderna is working on a flu vaccine. I think it was BioNTech that actually came out with a flu/COVID vaccine, and they saw a big pop. Moderna hasn't been able to develop that mRNA flu vaccine yet. Once they do, this is probably back to $200. So if you bought it here at 120, do I think you should sell? That's a tough one because, again, when you look at mRNA, their PE is 10. They're down 30% year to date. The average target price is 218. It's trading at 120. April 26th, Guggenheim initiated coverage, but no price target. Their average price target is 218, but that probably comes along with a lot of people not necessarily updating their rating this year. The SBB securities market to underperform. They moved from a 111 to a $93 price target. Meanwhile, March 13th, TD Cowen market performed to outperform, and they gave them a $180 price target. March 2nd, RBC Capital outperformed with a $200 price target. So you've got to take a look at some of these articles. If you believe in Moderna, understand what you're actually investing in. This is where I don't want to own it, is Stefan Bancel, who is their CEO, has sold, it's almost $5 million a day. You go back all the way to January, and if you even go back further than this, he's been selling almost $5 million of shares a day. I mean, that guy's got to have a huge cocaine problem right now at $5 million a day. By this time, I mean, the amount of meth and cocaine and drugs and hookers that this guy's buying for $5 million a day, it's amazing. But he's just selling too much for me to feel comfortable owning this one. I do think that when they come out with that flu vaccine, I think you do see this one at $200. So is it worth it? I don't know. Paul, I think, said he was going to sell Moderna for a loss and buy Schwab. In my mind, that's kind of a toss-up. I don't think that you sell one to get the other. It's two different actual investments. Schwab, in my belief, is a 2-year investment where you're back to 60 or 70 and you collect a decent dividend along the way. The problem with Schwab right now is that they went $2.5 billion into the bond market. It's a 1.93% dividend. Year to date, they're down 37%. I wouldn't expect this. The average target price is still 66. The management is buying at 60. So at some point you get back up to 60. I just don't know when. But Moderna is one of those other ones where I just don't know when it's going to be good. So let me take a look. Did I have it? Farfetch, FTCH earnings, huge. They popped as well. I think I've gone over everything other than BBBY. This one had a huge pop yesterday. Bad and Body Works. It was up on earnings, crazy amount, 30%, 20%, somewhere in that neighborhood. It went from $33.26 up to $37 today. I didn't read the news on it. So let's go over some scans. First scan, Microsoft. I mean, again, to my point, hey, if you for some reason believe that this is a bubble, how much money can you make before the bubble bursts? It's not about, hey, I've got to get out. Microsoft here paid their dividend. I reinvested in it. So I bought here at $314. I think at some point you can get this under $300. If you're not in it, if you are in it, don't sell it. It's got confirmation. I wouldn't sell this one. Exxon, XOM. I've talked about this one before, I think, in high oil prices. It's a $120 stock. It's at 104.92 right now. While you're waiting, you get a decent dividend. They're buying back a ton of shares. I think it's going to flounder there around 100, but you're getting a 3.44% dividend. You're down year-to-date 3%. If you would have bought last year, you're up 17%. So it's just a matter of timing. If you want to trim it, I wouldn't blame you at all. Simon Property Group had a cross-up. This is in the core portfolio, 105.54. It's trading at 106.66. Again, if the consumer is still decent, this is a $120 stock. In the meantime, while you're waiting for it to go up to $120 or holding it long term, you get a 7% dividend. I like this one. It's down 9% year to date. I think you just hold it for that dividend at 7%. CVX, which is Chevron, they had a cross up. This is a good one. At 154, trading at 156. I think it's a $170 stock. I think you're fine with that one. I think it's still good. So we had UDOW, which is up Dow, triple levered Dow. Hey, no. Sorry. You guys get a lot of me yelling at the dog today. 55.17 is UDOW. I think it was a good cross up. It's trading at $56 right now. Again, the Dow needs to come up if we look at the Dow Jones. And I don't know, did I go over ChatGPT, the portfolio? I think I did. They're up 1.4% versus 1.1%. If you're not following that one, it is on Twitter. It is ChatGPT Trader. So you can follow their buys. I think they're pretty public about it. They do have a paid service, but I'll leave the list of all these cross-ups. One that I really liked is Airbnb. Did it reach a bottom? I mean, if you're going on vacation, have you not used Airbnb? The problem is the valuation. It is super expensive. It is not, the PE is 37. I mean, typically travel stocks make 10 single digits kind of stuff. But, its average target price is 131. You're trading at 108. Its 52-week low is 81. That was back here in December. I don't think you're going back down there, but I think you could get in under 100. You have this descending wedge. I kind of like it here. I'd keep it on a lookout. I'll leave the others because I've gone on long enough. But let's talk about sponsors. $30 is $25, I think now, per month on Visible Phone Service. There's a link down below. It saves you $20, so you'll get your first month at $5. So, yeah, I like it. The other one is TrendSpider. I think a couple of people signed up in the last week, which I thank you for. If you need access to my algorithm and you've signed up, just email me. Hit me up on one of the socials. Just let me know. I can email you over links to all of it. The algorithm, the 4-hour algorithm that I use, that I show you guys every day. 65-minute algorithm, which is fantastic. It uses an 8-day EMA. If you're day trading, this one is great. You can set up alerts so that you get actual text messages, or if you're a boomer, you can get an email with actual prices that you should buy at and sell at. So you don't have to sit at your computer and watch a freaking screen for charts. That's what's nice about day trading with TrendSpider is you can do it all from your phone. You can look at the charts on your phone. TrendSpider does have a mobile app. I don't particularly like it. But I do love the fact that it will email me a price. I can then go on to the Fidelity app on the mobile app. I can be out hiking and trading stocks and not sitting there staring at a computer screen. I love it. The code DSP25 saves you 25% off. The link is down below. Click on it, sign up, follow with me. That way, when I do take vacations and I'm not here, you can actually just look at this stuff yourself. If you have any questions, down below there's a link tree. Our private Facebook group, we're there. You can ask me questions. One of the things I might start doing is inviting somebody on to talk about stocks, maybe on a Friday rather than doing a recap. I invite somebody on to do like a FaceTime kind of thing. I don't know if I'll use FaceTime, or I think there's a couple of tools out there like Riverside and stuff that I can use. But maybe I'll do that if you guys want to do that. But again, the private Facebook group, you can ask me to look at stocks, and I'll absolutely look at them for you. There's a lot of people that ask me to look at that stuff. Again, remember, rule number 1 is don't listen to a douche on the internet, and I am that douche on the internet. And absolutely do not pay somebody for a course, for trigger alerts, anything of that sort. I mean, again, Jim Cramer's $700 a year investment club is just a Discord group in Boomer style where he emails you. That's all it is. It's no joke. I mean, nobody will learn the tools. And then when you learn the tools, you'll understand, hey, this is a good buy. This is a good sell. I need to get out of this one. I think the hardest thing to learn as a trader is not when to buy, it's when to sell. Getting disassociated with this stuff is the hardest thing. And that's what TrendSpider does for me, is it takes the emotion out. When I get an alert that one of my stocks is crossed under, and on the algorithm, it says, hey, you should sell this one. I know that I've stayed in it too long because the algorithm usually tells me a little bit, 1 or 2% after it's sold. And if I am trading something, then I absolutely look at those. For the long-term ones like Google, Apple, Amazon, things of that sort, I don't worry about the algorithm. I use it as a guide as to when to get in. When to get out is completely personal, and it's on a whim. So any questions, hit me up on the socials. The link to tree is down below. Have a great weekend. For those of you on YouTube, if you get alerts, please hit the thumbs up button, by the way, while you're there. But for those of you on YouTube, if you do have alerts set, I am going to be testing my iMac this week to see that it doesn't freeze like it did yesterday. So you may get alerts that I'm live. I'm probably not doing stocks. I'm probably just here chatting. If you're in the neighborhood and you get an alert and you want to chat, absolutely hop on and chat with me, but I'm probably just testing that it doesn't freeze up again. Have a great weekend. I will be back Monday. I hope we close above 420 on the S&P on SPY. That will make my weekend much more pleasant. So take care. Have fun. Okay. Boom. Share, export song to disk. Okay, you guys got about 20 minutes of me yelling at the dogs there. Now I got to look at your... Sidebars. Kudos, Sherry, on getting in at 11.98. I think you've made some money also. Hey! No, man. You come down and pet him now? Oh, yeah. No, that you wanted to know if they were watchdogs. They are watchdogs. I'm still live, by the way, but I'm not recording, so I'm happy. They can bark. Malarkey. Did I say malarkey? I don't even know. Hold on, I got to restart Active Trader Pro and throw you guys over there while I upgrade. Cherry's going for coffee. Oh, boy. Hey, and if somebody has any questions, I know there's 17 of you guys in here. Hopefully everybody's subscribed. If you're not subscribed and you made it this far, hit the subscribe button. Come on, help a brother out. I ain't charging for this. I forgot to tell everybody to tip. But if you have made money, consider me your bartender. Oh, yeah. It was a Dutch company. Hold on. I know it. Novo Nordisk. Let's see. NVO. It's this company, Brian. It got you in at 168. You're trading at 170. It's a little bit extended. I mean, this is the shot that like Kardashians are taking, everybody. You can see the P's at 42. Essentially what the drug does, year to date, it's up 26%. 1 year, it's up 65%. So it's done really well. Target price is 159. So you are kind of extended. It's 1% below the 52-week high of 172. It's trading at 170. The average target price, again, it's not covered very much. So you can see the last one was July 15th, 2022. No insiders or selling, buying. You can kind of look at there. Jim Simons, 2023 portfolio, top 15 stock picks. He's in there. But this is the one. So essentially what you do is you get a shot and it inhibits your appetite. What's Manjaro? I don't even know what that is, Brandon. By the way, have you seen DPST? DPST seems to do... Let me show you. Yeah, Wegovy. That's what it is. But is that... I think it's for diabetes. But it's been short because they've been having problems keeping it in supplies. That's my understanding of it. I have several friends who have taken it. And they absolutely rave about it. Active Trader Pro. There we go. Yeah. And Lily, I think, even on the announcement, like shot up like crazy. You're annoying today. Oh, and now I got to let the dogs out. Oh, hold on 1 second. Wait here, Daisy. You're a truck driver, man, so I don't know how you don't gain weight if you're a truck driver. I just didn't eat on my way down. I'll be right back. I'm going to let these two out. Luckily, I'm right next to the door. Penny? Penny? Stop it. No, ma'am. Hold on, I gotta go get crackhead Penny. Alright. We're gonna get a carrot. Want a carrot? Let's go. We're gonna get a carrot. I'll get you a carrot. Hold on. Okay, we'll get you some carrots. You two were extra annoying today. I know. Here you go. I'm gonna get you 2 carrots. There you go. Daisy, you gotta chew carrots. You can't just swallow them. Oh. Okay. Show. Dude, that's awesome, Brandon. I had my own weight loss journey where I went from about 205 to 140 in a matter of 90 days. I went raw vegan. Not healthy. But that's awesome. Okay, what am I going to name this episode? Five. Yeah, all of those Wegovy and all of them are prescription. But it's kind of like Viagra, where you could just do a virtual with a doctor, and it doesn't matter. You know, kind of like weed. You can say, "Hey, I got a headache," and boom, you get a prescription. So it doesn't have to be like too bad, from what I understand. Brandon's like our own little personal doctor in here now. That's awesome. And I got 2 dogs here who are finally quiet. Copy. We're going to paste. And then I'll take that out. Let's see. Okay, now I've got too many freaking characters in there. I can take all that out. There we go. I am going to publish this. Let's actually copy and publish. Then we'll go to YouTube. Create, upload video. Select file. There we go. Upload that one. Okay. And we're going to say boom, 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 boom. SPY TQQQ Tesla, NVIDIA, Google, Microsoft. No! Okay, we'll do that. And then I've got to... No, then I got to go to Canva. Hey! Devin, you're one of my favorite energy names. I'll look at CF. I'll look at that. Let me just do my thumbnail real quick. to say. Shrink that down. And today is 5/19. Share. Download. Boy, I thought it was much later than it actually is. I thought I did like an hour today, but I guess not. Upload thumbnail, downloads, upload, next, publish. Okay. I'm going to close that. If you haven't subscribed yet, please subscribe. Let's look at, Devin wants me to look at CF. This is that natural gas play. CF Industries. CF is tough. I mean, here, let's look at the fundamentals before I shit all over the chart. So its PE is 4. It's agriculture inputs. Sells hydrogen and nitrogen products for energy, fertilizer, emissions, abatement, and other industrial activities. They're selling at 118, 110. The dollar amounts are pretty good that they're selling because the president just sold $20 million, but that was August, and that was at 110. Today you're at 66. Right now you don't have confirmation. You're about to get it. It's just after its dividend. The dividend that they pay is 2.43%, so it's nothing to sneeze at. The problem is, up here at 100, are you getting back? I don't know the industry of nat gas, but with nat gas, I tend to trade Boyle and KOLD. I don't think it's bad that you trade CF with natural gas. They are more of a fertilizer thing, from what I understand. LNG, which is Cheniere Energy, may be more of a pure play into natural gas. And the reason I say that is because what they're doing is they take cheap American natural gas and actually sell it in Europe where it's more expensive. They load it onto ships in Louisiana and Texas. And so they'll take, $10 natural gas here and sell it for $50 over in Europe. And that dollar amount got all the way up to about $300 over the summer. I think it probably gets up there again this winter. So as we get into here, I think, LNG is a better play here at 140 because I think it wants to be at 150. But natural gas has just been, again, it's been, a crazy one. Here's Boyle, which is your triple levered natural gas futures. $3.02. You're at $3.91. You're up 4% today. So if you're looking for a long-term one, CF Industries might worry me a little just because, and I don't know what the company's circumstances are. I just don't know it that well. But it would worry me that pre-pandemic, you're a $47 company. What has really changed with fertilizer and kind of their industry that justified $112? Because it's clear it's coming back down. I would assume that this level right here, if you let's draw a chart pattern. And again, this is a weekly chart, but let's touch 3 points on the bottom. 1, 2, 3. Assuming that's the bottom, then you got to touch 3 points on the top, and that would be it. Assuming that's the bottom, that's the range that you're in. And that means that you're staying above that 200-day. And typically, you go back here to 2017, it wasn't over the 200-day until it got to 2018. Then it kept there, but then the pandemic brought it down, and it just went back up. So I think you're seeing a move forward. I think more coming towards this 56 level on CF might be a kind of support level there. But again, remember, don't listen to a douche on the internet. But just with that trend, don't fight the trend. I mean, if you run my algorithm, here's the problem. My algorithm over 2 years getting in and out, it only makes you 3%. Buying and holding makes you 23%. So if you bought this 2 years ago, you're doing pretty damn well. If you bought it 6 months ago, you're doing horribly. Timing matters. So I don't know that the trend on this one I wouldn't fight it. I would say you're still in the trend. Yeah. PBRA. PBRA, I think that's the Brazilian. Oh, I didn't know SMMT was doing that. You got way more into that one than I did. SMMT got you out with a 6% gain here. Doesn't have confirmation on the algorithm. But if you've just got lunch money in there and it starts to take off again, I think it's a good play. Because I do think that this gap here, again, with that guy, that billionaire buying into the company, I think it's good. CI. This is Cigna, I think, right? CI. Yeah. I like this one. And I think James, our local chat room healthcare expert, he liked Cigna and Humana, I believe, were the two that he liked. But Cigna, healthcare has just been here. Let's take a look. Stop it. What'd you do? You're pulling on my cord. Hold on. I gotta fix the blanket for these two. Okay. Here you go. Hey, get out of the way, Penny. Okay. Onto the blanket. You got a blanket right there. Here, if we're gonna, I'm gonna look at XLV, and let's add comparison. I take out that. I'm gonna add an XLK, XLE, XLF. Maybe XLY for consumer discretionary. That might be a good one. So let's compare. Year to date, and look at how much XLK, which is technology, XLV is down 2%. XLF, which is in a crisis, is only down 4%. XLY, which is consumer discretionary, is up 18%. So while I think healthcare comes back, you go 1 year and your XLK is up 19%. Your XLV, which is healthcare, 2.82%. So it's just kind of flat. You go 3 year, your XLV is up 31%. Your XLE is up 111%. So it really depends on timing. So, Brendan, which one you want me to show a chart on? But CI, again, I picked UNH because it's the big boy in the group, and I tend to just buy the big boy in a group when I actually go into a group. I probably would have been better off just, not knowing the healthcare sector as well. I just think $500 is a trigger point with UNH. UNH is a funky one on the algorithm. The algorithm makes you 4%. Buying and holding makes you 15%. Right now it has you out, and you're at 482. I added in at 485. I haven't added more. Just because I don't want to get stuck where it goes back down to 460. I'll buy it at 460 and I'll dollar cost average. So hopefully that makes sense. And with that, I am out of here. It's 10:30. Your boy has to cut grass. I got to fix a window in my house. I've got to dye my hair so that it's white, not yellow. And I got to relax. Plus, I got to go on my 10-mile walk. Again, if you guys have YouTube screen is still on. Oh, I see. I was on Active Trader Pro. Man, I did all that genius stuff with charting, and I wasn't showing you any of it. I'm sorry. I think, yeah. Let's see. I wanted to go CF. Maybe I showed CF, and it was a weekly. I think that's the one that I was showing. That's what I was showing you, Devin. It just doesn't look good. Doesn't look good at all. And then UNH, I showed you. It looks ugly. I think I brought that up in the... but CI for you, Joe. CI looks ugly as well. I mean, it's just healthcare. And so here's the comparisons. Year to date with the XLV, XLK, XLE, XLF, and XLY. I mean, the segments just, they look okay, but it's funky. Okay. I'm out. Have a great weekend, guys. I will talk to you guys Monday. If you're on over the weekend and you have alerts on, I'll be trying to test that out. If you want to join in, feel free. I'll be as congenial and as fun as I always am. I'll only call you a douche about 10 times.